So, good evening, ladies and gentlemen. Thank you for joining me. What time are we? We are 7 seconds to go. I'd like to get started exactly on the dot. There we go. Welcome, 7 o'clock. Good to see you. Okay, so today we're going to talk about impulse management for traders. So, as I said in my email, if you're the type of man, woman who finds themselves succumbing to impulses, whether that's a bit of road rage here and there, or bleeding into your trading. Listen, we're going to cover a lot of ground tonight, and I don't want to get ahead of myself, but I want to kind of approach this in two kind of parts, tactical and traditional, if you like. So we'll cover that in a moment. But first, first of all, trying to think of too many things at once. Want to read you a little extract from my book, Any Excuse to Wheel Out the Old 100-Year-Old Book. As you know, I like to whip this one out when I can, and this is a good part. So, and interestingly, this book is pretty good, apart from the slight little mark, and this is on this page, so it's meant to be. So this little extract I'm going to read you from Studies in Tape Reading by Richard Wyckoff. This was a 1924 edition, as many of you already know, as I wheel this out again. But let me read you this, because I'm talking tonight about impulse management for traders. Before we get onto the risk stuff, and before we look at some charts, kind of go through what's happening, not an awful lot to look at, but some things I want to share with you. We'll go back to the slides and we'll kind of run through this whole process. So here we go. Under the section of self-control, Wyckoff says this: one may be trading too often. Many opportunities for profit develop from each day's movements. Only the very choices should be acted upon. The market will be there tomorrow in case today's opportunities do not meet requirements. And he goes on, but I think that is very apt and very succinct in that, if you are an active trader, if you are trying to spot opportunities intraday, sometimes there's not an opportunity and impulse gets the better of you. So we're going to cover all that today, and just know that traders from 100 years ago, 200 years ago, whenever it was, any speculator on the planet has to have dealt with his impulse. Either patience, impulse management, not getting sucked into things. These guys are talking about it in 1924, and I'm sure they're talking about it before then, and they were learning from traders before then. So it's just human nature, right? And so something I'm going to cover is not to beat ourselves up too much about this, but there's ways that we can improve it. And every good trader has come to a point where he or she has some kind of handle on impulse. Because listen, this as well as I do, right? You can have the best edge in the world, you can have the best intuition, you can have the best strategy, but if you're impulsive and you're taking trades you shouldn't, you're taking trades too early, you're taking trades just because you feel like it, you're oversizing on trades, it doesn't matter. I could hand you a magical 99% success strategy, but if you're impulsive with it, it just, at the end of the day, you ruin it. Well, that's the same for all human beings, right? So it must be combated. It must be attacked with full force. If you are the type of trader who is struggling because of impulse, then I hope this evening will help you. So before we do that, let's go to the charts. Because I want to share with you a few things. Of course, we must mention this. If you're trading with leverage, which many of you are, trading a CFD product, a spread bet product, you know how this works, boys and girls. You know this by now. But if you're new here, then hey, we should share this. The trading is risky, of course it is. This is the real world, guys. This is real world trading. This is not the Instagram stuff where everything goes perfectly. Things don't always go to plan. You will lose trades. The objective is to limit the losers, maximize the winners. Easier said than done, but that's ultimately what we're trying to do. However, if you're trading with leverage, if you're trading with margin, please be aware that losses can add up fast. And if you're new to trading, maybe you haven't experienced this yet, but be careful. If you're experienced with trading, we've all been in there where things have gone very nasty quickly with, whoa, that's getting a little bit heavy. So please only trade if you understand the product you're trading, understand where the risk is, how to manage risk with stop losses, understanding gap risk, slippage, all this other stuff that comes into play. Anything that's going to affect your bottom line, understand where the risk is, and of course, only trade with the money that you can afford to lose. There's no shame in starting small. Start on a demo and start super small. Pepperstone let you trade from very small stakes so you can just get some skin in the game to get the psychology going without putting too much on the line. And then when you're comfortable and you feel like upping the risk, you know what's going on. You understand the risks and you understand the potential rewards, and so you're weighing up that consideration and making a commercial decision for you. Okay, so very briefly, because I want to cover a lot of ground in the actual topic, just really a few things that I wanted to kind of point out what's going on today, what's going on at the moment. For me, the Nasdaq obviously was super bullish yesterday, quite bullish today with the wick that we've had and follow through. My line in the sand is very simply the high from Thursday and the low from yesterday. I know we've had quite a good reversal today, and there's been some intraday stuff. Fine, if you're active intraday, good. Hopefully, you got some stuff. But I like to see how we resolve from this, and so I really want us to see doing some business up here before I'm kind of okay. You know what? Maybe maybe Santa Claus is gonna kind of come with his rally this year. But, we've got bull markets don't just end, and the likelihood is this is a pullback and we push the highs. However, it's not a zero chance, and there is still a decent chance that if we start taking out these lows, people are going to scramble. So I'm just I feel like we're still inside what the range, the meaningful ranges, which is the high from Thursday, the low from yesterday. We're right in the middle of it. And then we might just sit there and do nothing, in which case intraday trades only, A to B. I think that's the way to look at it. Okay, so NASDAQ, that's that. The other thing I wanted to mention, which I think is pretty interesting, is crude oil. So crude oil, we had the peace deal agreed today. So in principle, I think that there's going to be a deal done. Ukraine have agreed to it. And so crude oil's fallen off. Now, if you look at the 5-minute chart, let me go to this keyboard here. If it was a 5-minute chart, you can see where the deal was agreed, sold off, and we're starting to creep back up. Now, this is where it gets interesting. If we start to do some business above that level, I consider that bullish, right? If we've come in, peace deal agreed, supposedly going to ease up the supply of crude oil. We know why, because there's no conflict. Then the pipe should be able to run freely. Everyone's happy. Everyone's doing business. Everyone's selling crude oil. Russia's selling oil. Blah blah blah. That should increase supply, right? So price goes lower. However, if we kind of start to creep up and start to trade above this sort of high here when the level when the peace deal was agreed, that tells you something. That's like, hang on a second, that really shouldn't be happening. And maybe finally crude oil's been sitting there doing absolutely nothing for so long, we might start to get a run back up to those sort of highs here, which I got an alert out from ages ago. That's my thoughts on crude. Is it that exciting? I don't know. Two other things to consider before we go on. We've got the budget coming in, the UK budget coming in tomorrow. All eyes on that for cable, all eyes on that for pound. Who knows, there's some leaks come out. Let's just see how it performs. Just watch price action and see if there's a kind of a new trend coming in, see how traders perceive certain impacts of the budget. Difficult to kind of front run that type of stuff. Yen's been persistently weak. However, today a little bit of strength coming into the yen. I'm still watching that because the Bank of Japan have said that they will intervene if we start to get up to 160 on USD JPY. Again, that's a way away, but something to be aware of. Anything else to say? Bitcoin still doesn't trade very well at all. Nvidia, yeah, that was a bit of a funny old day when the results were good and it sold off hard. Thanksgiving as well coming up. Maybe this week is to be patient. Maybe it's kind of impulse management week. Be mindful that, often money managers, traders, probably off across the pond. And if you're tuning in from across the pond, happy Thanksgiving. Thursday and a half day on Friday. So the market's closed on Thursday and we have a half day on Friday. Oh, I should probably mention the DAX. DAX, is this rally today from the peace deal? Maybe it is. Maybe. Again, I've got nothing much for you. I just want to be patient. Maybe this is a Wyckoff Spring type setup. So you've seen the Wyckoff Spring where we have the range, which we've had here on the DAX. There's the high of the range. There's the low of the range in the orange. We've got a dip below it here. If that is Wyckoff Spring, we might see some follow through. So I'm watching closely for that because there might be, would I chase it? Maybe not, but maybe you get a doji day after some strong days, it holds, then you might go, okay, that sets itself up for a break of highs. Who knows? Let's see how everything plays out. Okay, enough of that stuff. Let's hit the topic of the day, which is this one. Let me move that there. Let me move this here. Let me change what I'm sharing. which I think should be. Is that going to work? It is. Brilliant. Okay, right. So anyway, that's what we covered some market stuff there. Hopefully you will, whatever you're doing, just keep the risk managed. Like I said, the only thing we can control is how much we risk. You make that commercial decision, how much you want to risk on the trade, how much you want to risk on the day, how much you want to risk on the week, etc., etc., etc. That is all that's in our control. Everything else is up to the market gods. We take a trade, we hope it works out. We don't know if it's going to work out. We try and align our edge with the things that we think are effective. We try and increase our win rate, all this type of stuff we talked about before. But honestly, it just comes back to that same old thing of manage your risk, and be patient with stuff. Even if you're a day trader, I'm going off tangent here, but even if you're a day trader, looking at those charts we're looking at, wait until the momentum's on your side. Wait until the higher time frame chart is clearer. Anyone who's day trading, honestly, is so much better if you can just have clarity on the direction of the higher time frame chart and then align with that. You can be so much more aggressive. You can be have more clarity on your trades. Not second guessing things. It's the way to go. Anyway, this was the Wyckoff quote. Richard Wyckoff. Richard Wyckoff. He said this, and of course he's correct as well. Another one worth checking out for discipline. Best Loser Wins, Tom Hugard. There was an extract from that I was going to read you, but you know what? Let's just get on with the job. Anyway, really good book. So breaking the cycle of click before thinking and overtrading. So why does this topic matter? Why do we care? Why should we even be interested in this? Okay. As I said at the beginning, and I stand by this, and I don't often say, hey, you know what, this is a truth, but having traded for 24 odd years, having worked with dozens of traders, having seen great traders develop from poor traders, having seen traders never kind of get to the true potential and fall by the wayside, having spoken to behind the scenes of brokers, prop firms, etc., like this is the number one thing that must be attacked. Like, it must be. Who cares where the market's going? Who cares what strategy is effective? If you can't get a grip on this, there's just no scaling. You might have runs where you do okay, but you have this feast and famine. Now listen, I'll tell you, one thing I remember doing distinctly in my journey, and I'm trying to think back to when this was, and it must have been 2005, I want to say. I'm trying to think where it was. If I had beige CRT monitors, man, I was bought, those bloody beige CRT monitors. I remember having a few of those in there. And I remember impulse was such a challenge for me, and I'd be so impulsive. I'd be overtrading, trading too much size. And I remember kind of just looking at myself in the mirror and going, why? You need to get a grip of this. If you want to scale this into something meaningful, which you do, guy in his 20s, this was like all I wanted to do, then you have to get a grip of it. And at that point, I was like, okay, I was determined, regardless of no strategy, forget about strategy, forget about indicators, forget about all the stuff, the rabbit holes I was going down. I just want to get a grip on when I trade and execute. And maybe this is you. Maybe you are saying, nodding along, going, yeah, do you know what? I have spells of greatness and then I give it all back. I have spells of greatness and then I give it all back. Or grinding lower because I'm impulsive. And actually, there's a deeper reason why we do this. And often the reason is, we believe that more activity is going to produce more results because that's how we're conditioned. And ultimately, then it's sort of a subconscious set, take the trade. Discipline side of you saying, no, I'm waiting for my setup. And they kind of constantly kind of bashing heads, if you like. So, if you are a trader with some experience, which you probably are if you're on here, if you're a trader who knows they've got it in them, but this is how holding them back, then stick around with this, take some notes, and hopefully you take away all we need is one breakthrough that fixes that impulse. If you can have one breakthrough, the rest of it doesn't matter, because this should be the one thing you focus on if it's an issue for you. Okay, so also I think that people don't speak about this honestly. They're like, just be more disciplined, just be disciplined, and blah, blah, blah. Get up at 5 a.m., do your cold plunge, do this. Fine, there's tactics which we'll talk about, but ultimately there's other ways of doing it. And sometimes you're forcing yourself to do something is not the answer, because some of us have different personality types, etc., etc. And managing the state is just important, as the setup. And so today we're going to look at practical tools and kind of something a little bit different, right? We're going to look at look at this from a two-part perspective. One is classic tools, which you've heard of many before, but they're super valuable, and maybe one of these helps. And if one of these helps, great, hurdle over, next job, dialing in strategy, etc., etc. This can be so demoralizing. I'm thinking back how demoralizing it is when you kind of go, why have I done that? Why have I done that? Why have I been impulsive? You kind of sometimes you lose control of your decision making, and you look back at the end of the day and you say, well, I have no idea why I did that. Why did I take the trade? And you kind of get a bit angry with yourself. You're like, what am I doing? How can I not just stick to the process? Why do I do this all the time? And we'll get to that. We'll get to why this is happening, and we'll kind of come with some tools and stuff. And I won't go into kind of, some of the weeds and stuff. I want to give you some tactics, the stuff you can take away and try and go, that works, that doesn't work, that works, that doesn't work. But I know how frustrating it is when you have edge, or you believe you have edge, but it's this, I suppose, doesn't let you kind of execute edge. So part one of classic tools. Part two, tactical adjustments. This is the unpopular answer to this. It is what it is. That's the way it is, guys. Sometimes things aren't, you don't want to hear it. I know I definitely didn't want to hear it. But this might help you. So tactical adjustments. Okay. So why impulse happens? Really, this is, it's just how we're hardwired. We're human beings. We have this fight or flight kicking in. So maybe we think, oh, I've got to do something. Maybe you're kind of addicted to the dopamine spike of activity. Trading's an enjoyable pursuit, or it can be. We get this dopamine flood that comes in when we take a trade, the anticipation. Lots of traders like to say this isn't gambling. Ultimately, it is a risk-based thing. We don't know the outcome. So from that perspective, it's gambling. Now, we'd like to think, hang on a second, we have positive expectancy, so we don't know what's happening now, but overall, we expect the outcome to be X. But ultimately, we don't know the outcome, and human beings have been shown under studies that we get flooded with dopamine when there's an unexpected outcome, when there's that's how gamblers get addicted, right? And we are still in the same realm of taking these decisions. Yes, we're not spinning the roulette wheel, but ultimately we're still hardwired the same way, is that the novelty, the uncertainty spikes dopamine. So we've got to be careful with that. Third thing, is the over focus on short-term P&L. If you're a day trader, maybe an active swing trader, you're so focused on the P&L. I could ask each of you, hey, what's your P&L looking like now for the week? What's your account balance? And you'd say it straight away, because that's the one thing you're trying to improve. And ironically, when you don't look at that and you start looking at other things, then you start seeing price for its true representation of where it could go, and supply, demand, and balance, and pass on a lot of stuff, as opposed to this move here could boost my P&L, hence I need to get in this. That subconscious link often doesn't serve as a tool. And so, and also the final thing here is the do something bias. Many of you are working, you've got other jobs, running businesses, other commitments, and that, just by the nature of the beast, is you provide value and a service, you're compensated for that. That's how generally the world works. Trading's very, very different, right? And so if you were sitting on your butt all day long doing nothing, then your boss would say, what are you doing? And if you carry on doing it, you'd be fired. Or if you are the boss, if you had someone sitting there doing nothing all day long, you'd be like, you've done nothing, you carry on doing that, you're out the door. And trading is very, very different, right? We come in, we sit down, and the default response should be to do nothing, because we get rewarded for making good decisions, not for doing something. And so this bias of, I've sat here, I need to do something, the open's active, I should be getting involved in the open because that's my opportunity. And the combination of all these things flood you, and all of a sudden you're making decisions that you don't want to make. You're making impulsive decisions, and it's just the way we're wired as human beings. So it takes some time to unpick these things, but once you do, it's a much, much calmer place to trade. Anxiety drops, pressure to perform drops. Your shoulders, you relieve the burden of performance from your shoulders. You're not focusing on P&L. You're not focusing on having to do something. You don't get the euphoria and the anxiety that you often might get with your trading. It all just changes the way you approach trading. You can look at the market through a different lens. Very nice place to be if you can get there. Okay, so some of the kind of physical stuff that we see is you know, if you're trading the open, if you're a day trader, you're kind of looking at it a little bit more, your posture. So the physical signs that you are impulsive trading is you're forward leaning, maybe your heart rate's elevated, sweaty palm. I remember you used to come into NFP and I've noticed my palms are sweating and I'm like, mate, this is not the way to trade. And these are things as you develop over time, you go, hang on a second, this is not the name of the game here. You should be relaxed, you should be waiting for the response and do nothing unless you see this, this, and this. Playing this game of chess, not trying to box for your life. Hovering over the cursor, switching markets rapidly. We've all been here, and hopefully you recognize this and something needs to be done. Oh, just take a little trade here, just a punt, just a go, just a nibble, and skipping process steps because you think this is the trade that's going to pay me the money. I need to do this now. So all this goes on in your mind, and very often we aren't cognizant of it. We don't know, but little indications like this just sometimes can go, hang on a second, I'm in the mode where it could be impulse that gets me into trades. I don't want to be in that mode. I want to be in a mode where my process gets me into the trade. That's it. I'm not interested in reacting. I'm anticipating. I'm looking at my levels. I'm doing this. I know more than that in a moment. Okay, so let's talk about some action steps from the classical side of it. So part one or section one, I can't remember how I called it, but the first segment of, okay, what are the go-to things to do, which if you haven't done yet, should be looked at? Big fan of visualization. Yeah, I know some people at the back are going, boo, what are you on about? I want tactics. Give me the closing price for the S&P, boo. No, listen, honestly, this stuff works. Well, I found it's worked. Listen, I don't know for everybody, right? And you can look at the studies, and if you can be skeptical, which we are as all traders, right? We're a cynical bunch. It's easy enough. You just visualize. I don't want to go into massive detail on this because I've done a full deep dive webinar, but ultimately this helps you kind of practice and rehearse how you want to act. I don't want to be reactive when price spikes up and just buy. I want to be calm. I want to think of the next sequence. And so just like basketball players would rehearse the free throw, I can't talk today, the free throw, penalty kicks, etc. As traders, we can rehearse mentally going in the day and not doing the things we want to do. So yeah, like I say, deep dive on that before. Don't want to dwell on it too much, but super powerful. It's so easy, man. It's like, why did you not do it? If you don't believe it's true, it's like, you know what? I can do it 5 minutes. If it works, what's the payoff? Wow, massive risk reward ratio. Okay, so another sort of classical thing to do, if you like, is just to kind of think for a minute and say, hey, listen, you could call these affirmations if you like, but just intentions. Like, hey, just remind yourself what you're doing today. I'm being patient today. I'm only taking A+ setups, or only taking setups that are aligned with my process. Here's my process. I'm taking a future. I'm being, just to remind yourself, honestly, sometimes just this sets the tone for the session, right? It sets the tone for the trading day, where you've just reminded yourself of your intention. You've just put your focus on, hey, this is it. Some people use post-it notes. Fine. I don't know about you, but after a while, I become blind to them. So change them up regularly, move their position. People have post-it notes and they've been on there for months and they don't even know what they say anymore because they've seen them so often. Change blindness, I think, is the actual term. So by all means, use those, but switch them up regularly. Move their position, change the color of them. Little tactics you can use like that, just so you remind yourself, hey, and go through it. Patience first. And when you take in my trades that fit in my process, okay, right, your intention is set. Something just as simple as that just tells your subconscious, hey, this is what I'm trying to achieve. This is what I'm doing today. Just remember that. And is it foolproof? No, of course it's not, but it's a help. And what we're trying to do is compound these things. You do a little 5-minute visualization, you do a 1-minute intention setting, you've taken 6 minutes out of your day, woohoo! And that 6 minutes could have a massive payoff by putting you on the track to becoming the trader you're trying to become way sooner than if you kind of grind away, must be discipline. Why have I done that again? Back we go, must be this. It's like, okay, we'll try something different. Okay, let's talk about real world interrupters, if you like. I like to use a timer. I've got a timer here for many things in trading, and often you just go, if you're feeling that impulse, because we're all humans, right? I'll talk about that. I'm going to kind of explore that at some point as well in a slide. But we're all human beings, right? Human nature doesn't go away. So if you feel like, hey, I don't know, I feel like I want to get in that trade. Hit the timer, give yourself a bit of a timeout, 60 seconds. If I still want to take the trade after 60 seconds, take it, right? Now, of course, if you're actively scalping, you're going to have to accept the fact that you might miss the trade, but it's better to miss the trade than be impulsive and dive in. Just gives that, you want a circuit breaker. I call these circuit breakers, right? Anything to interrupt that flow of neurons going through your brain that is like, must do this, must do this, must do this, and you're subconsciously telling yourself that story without you realizing it. You want to break that. And so timer, something on a sticky note that reminds you, say pause, stand up before you actually execute, so you can start to build a habit of, say, hang on a second, before I pull the trigger, I need to do this. And maybe you stand up before you pull the trigger. It's just this little thing. It might sound silly, right? But you're just doing something. Walk away, go downstairs if you're at office, or go out the door for what, come back. Okay. And I appreciate that depending on the time frame you're trading, this might not be conducive, but anything you can do to interrupt this process, to snap you out of the loop of must trade activity, FOMO, dopamine, it just grows in your brain without you realizing it. Before you know it, you're in a position you didn't even want to be in, and probably in too much size as well. And you're kind of managing that. Then the fight or flight takes over. You're trying to deal with that crap. Then you have a loss. You're wondering, why did I take that? You know what, if I take this trade, that'll undo the loss, and I'll get back to where I was. So before you know, you take another trade, then that one loses. Now you're feeling really bad. You're down more than you wanted. You're looking, so must be patient. Then you see another trade, you go, you know how the cycle goes. So breaking that circuit, the circuit early on, means you don't get into that cycle. You can, listen, nothing's guaranteed, right? But limit the amount of times you get into that cycle. Okay, so something else to do is right before you click. Dull, yeah. Effective, yeah. Force yourself to write down, this trade fits my plan because. And if you can't justify it, it's impulsive. If you can, then it just calms you down. Like if you, in the old days when people were trading prop in some of the London prop houses, like the the traditional prop, a risk manager would come up, tap you on the shoulder, or a head trader would come tap you on the shoulder. Why are you in the trade? And if you didn't know the answer to that trade, close you out of that position. If you didn't have the answer to why you're in that trade, quickly, I'm in that trade because we've just dipped through the low and I feel like there's a momentum ignition bar here. My stop is here. I feel like we're going to push back to the open because of X, Y, Z. Okay, carry on. If you're like, and you're mumbling, mouse comes over, click out of the position. It's the same type of thing. And so you learn not to be taking trades on impulse, not to be, because there's no justification for it, and you might get tapped on the shoulder, justify the trade you're in. So be your own head trader, be your own risk manager, and say to yourself, hey, before you take the trade, or in the middle of the trade if you like, sometimes that's too late, but I'm doing this because of X, Y, Z. Okay, talked about these. Step away for 30 seconds helps so much. It's the most easy thing in the world. And if you can force yourself to do it, it just is a circuit breaker. Do some breath work, cold water on your face, anything just to flip it, right? Who is it who says this? Who's that dude who goes around? Tony Robbins, right? Tony Robbins, love him or hate him, whatever you think of him. He talks about this a lot, and some of these high performance kind of coaches in other fields talk about doing something to change the state. Cold water, stepping away, looking out the window, changing your breath, changing your posture. He talks about putting your arms up, whatever it might be, but it resets your nervous system. This is science, right? I don't know. I'm not I to argue with this. Just know if it's effective and improves my bottom line. Yeah, sometimes you just need that reset, whatever that reset might be. And one thing else to look at, which is, I explored these a while ago, and then I've recently got back into these, is these binaural beats. So, playing these specific things, you can get them on Spotify. Where they just supposedly, I don't know, again, low risk, high reward. I like that as a sign. I'm a trader, right? How long is it going to take me to do this? Put on your noise cancelling headphones. It has to be headphones as well. And it plays a different frequency in each ear. And what this does is it kind of puts your brain in a different state. Now, I don't know. Studies seem to show it's effective. I quite like it. It seems to slow me and calm me down. And you can use different waves for anything, and obviously do your own research and find out what's best for you. But you can have these different waves, supposedly, that help your brain just calm yourself. And listen, I mean, I don't know how good this is, but listen, you and I both know that music changes your state. If you're driving, you've got some high intensity, heavy rock on, or some, techno blasting out, you're like, whoa, you're on it. Same at the gym. Yeah, you got that. And then you go to some sort of 80s love ballad, your state changes. You're not going to be there bench press, doing your maximum bench press, listening to Roxette or something. It must have been, it's not going to work, right? So we know that it changes our state. So use music, use binaural beats, use stuff to help you get into the mode that you want to be in. Easy enough, simple enough, cost nothing. Even if you're not into the binaural beats thing, fine. Just maybe find some tracks and some music that put you in the state that you want to be. Okay, let's talk about tactical adjustments. So if all that stuff, which we've talked about before, maybe some of it's new to you, maybe some of it's not, but think about how long it takes you to listen to the right track of music to get you in the right state, or have the right music on if you're trading, if you need to be in that state. So it gives you focus, whether it's binaural beats, whether it's some sort of music that heightens your awareness, keeps you focused, doesn't encourage you to overtrade. How long does it take to visualize? How long does it take to kind of, these things are easily done. However, I also know that many traders try this, and they try it, and they try it, and they try it, and they go, Mark, I tried this, I tried the timer, I bought the timer, I've listened to binaural beats, I even upgraded my headphones, I did this, I did that. I'm still trading impulsively. I'm still doing stuff that I don't want to do. And my answer often is, okay, we'll stick with it. It's not instant, right? You can't just go, I'm going to do all this on a Tuesday evening and go, right, I'm going to fix it by Wednesday. Give yourself some time. And by the way, many of you have got this already, but if you go to my website, tradersmastermind.com, I've got a free discipline tracker. You can download that. You can make your own if you want. You don't have to download that, but it's free. It's a Google Sheet template. And the idea and why that's come to mind is that you're trying to improve month to month. So if you've got 20 trading days, you say, right, 10 out of 20, I want to make sure that I stick to this rule. And then the next month you go, okay, hit that. Next month you do 12, 15, 20. You get the idea. Use that, use your own thing, use paper. But the point I'm making is that you're never going to do it instantly. So give it time. If you haven't given it a decent amount of time, give it more time. However, if you have done this for a period of time and you're still impulsive, then we need to go nuclear. We need to think of the unthinkable, and we need to look at how you are trading and make some tactical adjustments. So just maybe, and I've seen this work more than once, and it can be the right way to go. Maybe you're trading the wrong style for the personality you've got. Maybe impulse is not the discipline issue. Maybe it's just the way you're wired, and you're flogging a dead horse trying to unpick it, force yourself to be someone you're not. Now, again, I say this with caution because there's so many things you can do. From a lot of people, it's just being more focused and taking time and getting used to it and using all those tricks and tools and what have you to improve it. But there comes a point where you go, hang on a second, why am I banging my head against this wall persistently for years and years or whatever it might be? Maybe I need to pivot. And so if you are struggling with impulse, it's almost certainly you're a day trader doing this. Maybe day trading isn't the right environment for you. Now, before you go, whoa, and hear me out, it might not be the right environment now. Maybe you need to make an adjustment and then come back to it later. And so here's something to think about and sort of test yourself, right? If you're a day trader and you're impulsive and you're trying to get a grip on your impulse and you've done everything you possibly can, just ask yourself these questions and be truthful with your answers. Does the decision speed make me worse? So the pressure of having to make the decision before that 1 minute bar closes, the 5 minute bar closes, does that make your impulse worse? Do you have impulsive nature because of that? Do you trade better when you're not on the screen? I.e., have you tried trading, walking away, and how did that go? I bet it worked well. I bet you walked away, came back, and like, whoa, I was stopped out or hit my target. It was quite relaxing, actually. Do you overtrade around volatile times? So are you seduced by high volatility, the open, price action going on off after NFP, or a big active day? Does that create overtrading in you? If it does, then maybe Day trading is not the answer. Maybe you need to scale things back and say to yourself, listen, man, this means something to me. I'm trying to get somewhere with my trading. I'm trying to improve this. It's important. And so maybe a sidestep is the right answer rather than just grow, and say, okay, you know what? I'll do anything I need to do to get to where I want to go. Now, maybe I'll make a pivot adjustment and come back to day trading. And a lot of day traders like die hard, flag on the ground. I'm a day trader. Listen, honestly, I used to be like that. I'm a day trader. I scalp and I'm a tape reader. And it took a while for me to say, listen, no, I'm a trader. I take advantage of supply demand imbalance. I use momentum. I use certain price patterns, and it doesn't matter whether it's on a 1 minute chart or a daily chart. My job as a trader is to try to identify these patterns and carve out an edge. And so when sometimes your identity is so much, I trade this market and this, and that's not serving you, trying to force it. Maybe you're just the personality who doesn't thrive in a day trading market. I've seen traders been so so down the rabbit hole of day trading, scalping. I must get better. Because, by the way, this is normal. The people who come into trading, especially if you're on this type of webinar as well, rather than people just try and disappear, you're driven, you're ambitious. You've probably pushed through some barriers before in other areas of your life. You're like, well, this is the same. I just do more. I push harder. And this is where the confusion comes in. It's like, hang on a second, why am I acting impulsively? Why am I doing these things that I shouldn't be doing when actually normally if I just try harder and I put my mind to it, I can achieve quite a lot. I've done quite a lot. Look at this, look at that. Maybe the answer is, okay, my personality I'm trying to play to my strengths. That's what we should do as traders. What are your strengths? And so when you compare these two, position trading, i.e. multi-day holds or multi-hour holds, doesn't necessarily have to be, we're going to holding it for ages and ages, right? You're still a trader. You're still taking advantage of supply demand imbalances, springs, expanding, contracting, volatility shifts, news flow, etc. All the stuff that you do normally, but it just changes the rhythm a little bit. And it just takes the pressure off you. And maybe that's all you need to let your edge flourish. Maybe you need to go from kind of fast decision making to calmer. Maybe this is grating a bit because your kind of identity is, well, I'm good at making quick decisions. I'm good at this, I'm good at that. And maybe you are, but it only takes one chink in the armor to pierce the armor and it's game over. If you're trading very, very well and then in one 15-minute period trading impulsively and giving back all the gains and more, then it's pointless. So maybe the answer is going from noisy to structured, from high stimulus, got a dopamine flashing lights, to like, you know what, I just look and I recess and I go, this is what I'm looking for. This is the higher time frame. I'm looking for this level, blah, blah, blah. A calmer, considered way to trade. You're not always tempted to trade. If you're sitting in front of the screen, you've got a 1 minute chart flicking, ding, 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 ding. You're constantly saying, don't trade this, don't trade this, don't trade. You only have to succumb to it once, and then you start impulsively trading. The stupid analogy always comes. It's like if you're trying to lose body fat, trying to lose weight, you don't sit there staring at a chocolate cake going, don't eat it, don't eat it, don't eat it, don't eat it. At some point, you go, sod it, have a slice. You're trying to not drink. You don't sit in a pub at the end of the bar going, not going to drink, not going to drink, not going to drink, not going to drink, or go to a party where everyone's drinking. You just don't put yourself in the situations, right? Stupid analogy, but you get the point. If you are an impulsive trader, don't put yourself in a situation where impulse can get the better of you. If you are a position trader, if you're calmly placing your orders at the end of the day, beginning of the day, certain periods of time during the day, looking at the market, assessing it, there's no temptation there to go, oh, I'll have a quick, this looks like a great trade, I think it's going up, click. There's no temptation, so you remove yourself out of that position, out of that situation. If you get bored, you're not there, oh, what's to alleviate the boredom? Click, 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 click. It's actually doing something else because you're not in front of the screens. So as nuclear as this may sound, and some people are like, oh my God, I can't believe you're suggesting this, it might be considered. And listen, I don't stand here or sit here and say, you need to switch strategies, you need to do this, you need to do that. This is only if you've pursued all the avenues of attack, you've done this, you've done your visualization, and you've been pushing it and pushing it and pushing it and pushing it. There's no harm in pivoting. And I know you're frightened to, because frightened is the wrong word, reluctant to, let's say, because you think you've put all that work into day trading and scalping and all the stuff that's very good from it, but you can take a lot of that over to position trading. Maybe you position trade for a little bit, see how you feel with it. Maybe just that calm nature unlocks something in you a more disciplined approach, you can go then back to day trading. Maybe you find, actually, you know what, I'm smashing it with the position trading. I don't need to be sitting there day trading. You know, there's the various different angles of attack here, and often the answer is not what people think is, okay, well, I'll stop day trading for a bit, I'll position trade. Often that is the way to move forward, rather than let me try this new trick, that new trick, that new trick. You know, so some examples here in temptation. You just want to manage your environment. Like I talk about sitting in front of the chocolate cake, sitting down the pub at the end of the bar. You adult, you get how this works. You put yourself in a position where you might be tempted, then it only takes one lapse in temptation and you're done. So consider trading as the same. It's like, I don't want to be getting sucked into stuff. When do I get sucked into stuff? The first 15 minutes. Well, don't come in at the open then. Make sure you come in after the open, calibrate, assess, look at what's going on. All right, maybe you consider yourself as an excellent open trader. Well, yeah, but maybe the impulse is on doing that. Okay, we'll come in later. Assess it. Say, is there a trend developed? Is there a play from this? Oh, we mean reverting. Let me be calm about this. Maybe don't look at the screens. Whatever, you know, I can go through all these, but all the stuff that maybe the environment you're in or the environment you put yourself in needs to be controlled so the impulse can't trigger. You know, you don't want to be in a situation where it takes one lapse of concentration, one lapse. I mean, you're a human being, right? You can't be perfect forever. Then you start doing impulsive trades, because it's important, right? You want to go this hurdle. You want to get this nipped in the bud so you can move forward. Okay, so maybe here's some options. You do swing trading, 1 to 3 day holds, I call this. Could be more. Some guys trade for weeks at a time. Fine. Maybe going from day trading to that's quite extreme, but 1 to 2 day holds is fine. Maybe you go a 4 hour chart. Maybe you just do up the time frame to a smidge. Maybe you're trying to hold overnight. So I've shared stuff in my daily email about edges, you know, the weekend edge, some overnight edge, certain things about days if they're closing the extremes. Maybe you become an expert in overnight edge, and you find and identify the markets that have a likelihood to follow through or mean revert, whatever it might be, and you trade like that. So you aren't putting yourself in a situation where impulse is going to get you. And again, there's other things to consider. Can you sleep with positions on, blah, blah, blah. I get it. I understand it. But it's something to consider. Maybe you use limit orders only, and you don't allow yourself to trade market orders. You're like, hey, I put limit orders in only. That's it. That eliminates the impulse. And again, you want to make sure you aren't in front of the screen constantly bombarding yourself with you know, stuff that could trigger your impulse, right? And this is not weakness, right? A lot of people think I've failed. I've moved from day trader to swing trader or position trader. Listen, when you are depositing your funds in the bank manager doesn't say, excuse me, sir, is this from day trading profits? Because I can't take it if it's not. They don't, right? It doesn't matter where it comes from. You just trade. The job of a trader is to execute, take your chunk, bank it, take your chunk, bank it. Whether that chunk's 3 day hold, whether that chunk is a 10-minute hold, 30-second hold, it doesn't matter. But if you're playing to your strengths, it's intelligence. It's crafting around who you are as a person, not trying to mold yourself into something you might not be. Something to consider. So a couple of points on this. You're a human being, and despite what anybody says, right, every trader is not every trader is a human. Every human trader is a human. You know what I mean? So of course there are quants out there, and of course there are algos. Forget about those. But every trader, no matter how experienced they are, it's probably a better succinct way of putting this, is a human being. They make mistakes. I talk about watching interviews with hedge fund managers who have been trading, you know, 40 years, 50 years, managing multi-billions, saying they make mistakes. So don't expect to make no mistakes. You're a human being. That's what gives us our edge. And some days you're on point, you're calm, you're patient, you've got it dialed in. But some days maybe emotions are heightened, you're tired, you're triggered. This is human. This is human life. You know it is, right? It's life. If you've got kids, you tell your kids this. Some days you're going to feel great, some days you're not. It's managing that and going through day-to-day life. But the same in trading, it's managing that. And what you don't want is to just blow up the account or do massive damage on the days where you're a human being and you just dips down a bit. You didn't sleep that well. Something's on your mind. That then causes you to lose money. There's no way to trade or live, right? And so something to consider is, okay, listen, I'm a human being. I can't beat myself up for this. There are times when this is going to happen. There are times when I'm not going to feel on point. There are times when this. So Why don't I adjust my strategy? Why don't I adjust my business model to accommodate that, right? And so thinking about adjusting, how you approach the market to accommodate you as a person. And so the real win is, it's not something you fix, it's something that you understand. Impulse, this is something you understand, you can contain, and you work around and design your trading life to minimize. So if you understand why you're making the impulse decisions, you contain them so that the ones you do, and you will still make impulsive decisions, aren't that damaging. If you're trading a slightly higher time frame, it's not going to hurt you so much if you, you know what, maybe I jumped the gun a bit there. If you're scalping actively on a 1 minute chart over NFP, then impulsive decisions, you close your eyes for 5 minutes, all of a sudden you're down, 20R, and you're like, well, hang on a second. So again, contain the damage and limit the damage and let yourself be a human being and find a workaround. And that may mean, all right, let's try these things first. Try the timer, try the visualization, try the stuff that everyone talks about and psychologists talk about. And yeah, they're all very, very good. But real world trader says, okay, I need to solve this problem. Maybe I need to change the instrument. It's too volatile. The time frame I'm trading is too much. The frequency. What operational changes can I make to my trading that actually support me rather than put constant what's the word I'm looking for here? Trying to seduce you into doing stuff. A temptation is the word I'm looking for. Constant temptation to overtrade. Remove that, and that's how you kind of craft edge that is sustainable, that is going to serve you for a decent period of time. Okay, so one final point I've got here. Yeah, final point. I wanted to mention this. This has been a bit of a game changer for traders. ChatGPT, using prompts like, I feel like taking a random trade, help me slow down as a circuit breaker, talk me through my plan and whether this fits. So you speak to it. This is so useful as a trading therapist, psychologist, coach, whatever it might be. I know we've talked about this before, and we're going to kind of, I think next week or the week after, do deep dive on AI and give you a 30-day challenge to really use it more. But even things like, based on the webinar that I've just listened to, put the recording in when it comes up, and Pepperstone send you the recording on YouTube, get the transcript, stick it in and say, this was interesting. What can I take from that to give me a checklist to follow? All this type of stuff. So this is a really, really useful tool. I wish I'd had this tool back in 2001 when I started trading, because I think it would have been a game changer if I'd have used the tool. And just talking to it and saying, hey, I'm trying to do this. And even if you're transitioning from day trading to swing trading, that's only transitioning from day trading to swing trading, you can help talk through with AI, hey, this is what I'm trying to do, push back on it, this type of stuff. Anyway, I wanted to mention it because I think it's super, super useful these days. Okay, so that's what impulsive trading, understand it, contain it, work around it, design your trading life to minimize. Good stuff. If you've got any questions, guys, I will be happy to take them. I hope you found this valuable and useful. If you want to check out my website, you're new here, you're very welcome to tradersmastermind.com. Loads of free content, old webinar recordings, podcast on there. I interviewed Tom Hugard, he was on there. I didn't interview Richard Wyckoff, he would be good, but unfortunately he's not alive. Discipline tracker, daily email, all sorts of stuff. So, check it out. You're very, very welcome to. Okay, let me have a look and see if you guys have got any questions. If you haven't, I understand. You've got things to do. Appreciate your time. Next week, by the way, these questions come, there's a few here. Next week, we're talking about trade management tactics. So how to protect the trade, scale the trade, and exit trades with more of a structure. So, regardless of what time frame we're trading on, like, if we're using ATR, VWAP, and kind of building an if-then trade management plan, so you're not flying by the seat of your pants. Because trades, it's all very nice and dandy to say, oh, well, I've got this, and if it goes to target, I take it here, and if stop loss, I stay here. Now, fine, if you're very structured, fine. But often trades go in half your way. When do you manage the trade? When do you peel some off? Should you scale out? And so hopefully we'll add some clarity around that. Let me pop out these questions. There's a few come through. Okay. Great topic. Thanks for doing it. Cheers, Gary. Thank you. Alison says, thanks, Mark. Valuable as always. Appreciate you, Alison. And Ed, thanks as always. Appreciate you. Rowie, hello, Mark. Good to hear from you. Good to hear from you, Rowie. Any thoughts on Euro USD? Not many, Lana. Not many. Let me just see. You know what? I haven't traded Euro for a long time. It feels boring to me. It's stuck in this range, isn't it? Again, bit of a bid today, but yeah, probably the wrong person to ask on Euro. I can't honestly give you a feeling on that because I'm just not in tune with it. I'm trading for a long period of time, and sorry. Paul says, thank you. That clarifies to understand yourself, not to follow. Thank you, Paul. Appreciate that. And final one, Marinus says, hi, thanks for the usual great content. Regarding VWAP, okay, VWAP question, why not? We've got a few minutes. Regarding VWAP, how do we know when price is most likely to head back to the mean instead of mean catching up to price instead? Oh, good question. Okay, very quickly, one of the things to look at is what's the day type? Are you in the prior days range? Are you in a narrow range relative to the usual? So use your ATR to structure that time of day, like and the day type. So if it's rotational, we've been rotating around VWAP perhaps, or even if it's not necessarily rotating around VWAP, you've had kind of excursions to the high side, to the low side, then, you know, most likely, not always, most likely the VWAP is going to act as a kind of magnet to price. So something to consider. But if it's a trend type day, very often that is the mean will catch up to price. So it's just taking in some of the things like the day type, categorizing the day type. Do you think it's a rotational type day, or do you think it's a range expansion type day? Range expansion or breakout type day or trend day, same type of thing. No, I'd avoid it. If it's had that sort of character of rotation around the VWAP, or at least some kind of excursion back in, maybe it's an inside day, maybe it's inside multiple weeks, multiple days range, then I will be more inclined to think that the VWAP is going to act as a magnet as opposed to price staying there and pushing away. It's just a lot of these things you kind of take into account. Thomas says, thank you, Mark. Lana says, thank you for the valuable content. Marina says, thank you in response to that question. I hope that's helped, Marinus. Marinus, if you go to my website, tradersmastermind.com, on there, trading strategies, I'm trying to collect all the information a bit more. Obviously, it's totally free. If you go to trading strategies, VWAP strategies, I've got some good stuff on there. I think it's good anyway. Valuable ways to kind of look at VWAP through a different lens. I think I did a webinar on that, so you can watch that if you prefer to do that, and some written content as well. Finally, Austin says, it's like you're talking directly and personally to me, Mark. Austin, thank you. And you know what? It's because I've gone through the journey, and I see it with others as well. So it's a long time since I've kind of gone through the early stages of my journey, but you know, I see it with others, so I know, you know, in the front line, I get it. I understand how we feel, what goes on in the mind, the nuances, the intricacies of the urgency, the kind of wondering why you did that, the disgust, I get it. So, you know, hopefully my experience and seeing others can help you. And if it does, that's my, you know, job done. Final thing, David says, hi, Mark, my new mantra when I'm out jogging or anywhere, my craving for trading and fear of losing leads to my emotional executions. Good stuff. Yeah, did anything like that to reinforce what you're trying to do. Felix says, hi, Mark, great topic. Thanks for the presentation. Appreciate that, Felix. I'm trading the New York Open. You usually need one or two failed trades until I get in sync with where the market wants to go. Okay. I think it comes down to reading what kind of day this will be. I get a big FOMO if it's a trend day and I wait too long for confirmation. I'm a quick action taker. Anything in particular to focus on? Just be more patient. You know what the stock answer for you is? Just be more patient. And yeah, you should. But let's be real, right? That's blase answer that anyone else gives. Here's something to consider. If you know the first two trades are in sync before are losers, or you need a few trades to get in sync, you are what's called a trader who relies on a feeler position. And so use that to your advantage. You obviously need some skin in the game to read the market, to feel supply demand shift, to get the sentiment, to get the juice of the market. And I get it. So maybe the answer for you, Felix, is just to say, you know what? I take a very small position the first couple of trades because I need to get some skin in the game. And maybe all that is just a long or a short. You go in, very small position, just so you can feel it. And that's what's needed. So use that to your advantage. If you feel like you've got more edge after you've had a few trades, then just trade those small size, very, very small size. It's a cost of doing business. It's a loss leader, as a supermarket might say, right? And And again, being aware of this is step one. So good for you for doing that. And then step two is to say, well, how do I use it to my advantage? If I'm good at this, then maybe I do need to feel a position. Maybe I do need to take a couple of trades first to get in tune with things. And if there's a trend day, you know what? Most day traders struggle on trend days. It kills most day traders actually, because most people fade it. If you're not fading it, at least you're doing that. But if you're waiting too long for confirmation, you know what? At some point you go, what? It's a trend day, I'm done. Here's something you can do, Felix, that ticks the box in your mind that says, okay, I might have missed it, but there's still a chance of getting something. Set an alert for 75% retracement of the trend, because likely if you get that, there's been some news, there's been a reprice, and you and I both know that actually if you had a really big trend that it reverses, very often there's opportunity in the last hour of the day on the short side, in the case of an uptrend. So if you set an alert there and go, you know what, I don't think there's any edge here chasing this, I'm not going to chase it. However, my alert goes in. If it comes back 75% of the move, I want to be at the screen because I think there's a short-term short opportunity, maybe getting an A to B trade on the panic as we flush through lows, or whatever it might be. It's structuring the next trade that helps you feel like, okay, I've not captured this trade, fine, but at least I'm ready and prepared for potential next trade. That just helps the mind feel like it's doing something constructive. I'll take the last question, guys. When Eric says, hi, when you're trading within a range, but the price leaves your zone without you, and it's almost a quarter away, would you take a bigger risk or just leave it? You're trading within a range, but price leaves your zone without you, and it's almost a quarter. Okay, so if you miss the breakout, you leave it, or you structure the next idea. Here's the trick with this, guys, and these are similar questions, and these are good questions. If you miss something, that's just one sequence. Try and think in terms of sequences. The market breaks out, it consolidates, it backfills, range expansion. There's different sequences. So when you see one sequence, i.e. it's broken out, or Felix was saying it's gone into a trend mode, think of what's the next sequence you could take advantage of. Do you want to wait for a pullback? That's with the second sequence. In your case, Eric, it's broken out the range. Do you want to wait for a test of this? Do you want to wait for a bull flag? Do you want to wait for it to run and do what it needs to do? Maybe the opportunities are mean revert. You start thinking this game of chess of, okay, this is one sequence I've not traded, but how can I be smart here? How does this create power for the next sequence? In the example of a kind of trends type day, an explosion from the open, the next sequence that creates high probability that the first pullback is going to hold, right? Of course, no advice, all this type of stuff, but hey, I've not got on that, but actually the more this goes with the earlier opening dry without pulling back, that first pullback, that first wick, that first bull flag, I want that because that's created that momentum. A lot of people are stuck short. There's a lot of buyers stepping in. I know that's a more high probability. So it's thinking not in terms of missing this, but thinking in terms of what has this done to set up the next sequence. And that helps your mind so much, rather than kind of think, I should get this. How do I get on this? Like, okay, I missed it. It's fine, whatever it is. But how does this now add more weight to the next play? And then you step back, you plan it, you think about it, and then you wait for it. That's such a better way to trade. And it helps loads when you think of it like that. I find it does anyway. All right, gents and ladies, thank you so much for your questions. And thank you for being here. I enjoyed this one. Hope you did too. And we'll see you next week. Take care, guys. Bye-bye.